Welcome back to Broader Financial Future, to all my future millionaires and billionaires out there. Hopefully everyone's having an amazing day so far. In today's video, I'm going to go over two dividend companies in an electric utility space, Duke Energy and the Southern Company. Now, before we get started, if you haven't done so already, please subscribe. It really helps out the channel, and smash that like button and stay tuned. Now, just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only. Any investment may involve risk, so it's important we always do our own homework when it comes to investing in anything. Now, let's jump into today's video. Now, I currently hold a position in the Southern Company, ticker SO, but I've been looking towards getting into Duke Energy, ticker DUK. So I wanted to do a quick breakdown of both companies to see, is it time for me to actually jump into Duke Energy? So Duke Energy, for the last 52 weeks, it hasn't been performing that well, especially compared to the S&P 500. It's down almost 10%. Year to date, the 52-week low was around $62 and the high was $101. So it's below its 52-week high, and it's trading below the S&P 500 52-week performance. So it may be on a discount so far, just looking at these numbers here. Now, Yahoo has a one-year target estimate of $100.60. So it is trading below that valuation in the 52-week high as well. Now, their market cap, this is a larger company, at $65.8 billion. So in the utility space, this is definitely one of the larger utility companies out there. Now, one thing I don't like about this company, their PE for the trailing 12 months is 50.1, which is extremely high, but this year estimate is going to go down to 16.7. So it looks like there's something that's happening there. Now, they have a great dividend yield at 4.51%. So that's a nice, healthy size for a dividend. For 8 consecutive years, they've increased their dividend, and they've been committed to paying a dividend for 94 consecutive years. So even the years they didn't increase their dividend, they still paid out some form of a dividend payment. So that's good to know for Duke Energy. They're committed to paying a dividend, and that's one of the things that I like. I'd rather have a company cut their dividend and still pay a dividend compared to a company that's going to suspend their dividend and not pay a dividend at all. So that's one of the things I do like about this company. They're definitely committed to paying a dividend. Now, when I look at their 5-year dividend growth rate, it's 3.18% on average. Their dividend payout ratio is a whopping 226%. Now, that's extremely high. In this space, you do expect the payout ratio to be high, but the industry average when it comes to utilities is 95.46%. So the payout ratio is essentially almost double. So that's one thing I don't like about Duke Energy. Their total cash on hand is almost $260 million. Their EPS growth is negative 66%. The revenue growth for the trailing 12 months, again, is negative 4%. For the trailing 12 months, their operating margins is 23.32%, and the gross profit margin for the trailing 12 months is 42.91%. Now, some of my takeaways is this company has been beaten up a lot. They're undervalued by 16% if we're looking at the Yahoo one-year target price. Let's take a look at the Southern Company. That's the company I currently own. Now, this company as well, this space has been not too kind when it comes to electricity compared to the S&P 500, which is up almost 15% for the 52-week performance. The Southern Company is down almost 10%. At their low, they're around $41, and at their high, upwards to $68. So they're trading somewhat in the middle at the moment. Their 200-day moving average is $58.20, so it's still trading below their 200-day moving average. So you're getting a little bit of a discount there. In their one-year Yahoo target estimate is $64.04. So it's trading below its 52-week high, its 200-day moving average, and its one-year target. So that might be a bit of a discount at the moment. I have to kind of look and see what's my actual average cost. I might actually add some more shares. The market cap for this company is $60 billion. Now, I do like their Their PE ratio at 19.4. So they're definitely lower than Duke when it comes to their trailing 12 months. Now, this year estimate is going to go up to 17.5. Actually, it's going to go down to 17.5. And they essentially have the same dividend yield at 4.51%. So when it comes to the dividend yield, Southern and Duke is the same. Now, when it comes to the Southern Company, they've increased their dividend 19 consecutive years, which is more than Duke. Their dividend growth rate similar, but Southern also has a slightly higher dividend growth rate of 3.36%, which is essentially close, relatively close when you compare both companies. Now, one thing I do like about SO, the Southern Company, their payout ratio is 87.37%, which is lower than the industry average, which is a good thing. They have $1.1 billion in cash. Now, their EPS growth has been down, negative 35%, which is still better than Duke at this moment. Revenue growth is down as well for trailing 12 months, negative 4.87%. Now, their operating margin is about 25.25%. So when I really look at both of these companies, and let's take a look at if you look at the Yahoo 1-year estimate versus the current price, they're trading at a discount of about 12% if we're going by those numbers. Me personally, some of the numbers I like to look at the most are the PE. Southern wins that battle. The dividend yield, it's a tie when it comes to that. When it comes to consecutive dividend increases, Southern wins that war as well. Their dividend growth rate I would say the dividend growth rate is a draw, even though Southern is a tad bit more, but not by much. Now, Southern wins the battle when it comes to the dividend payout ratio as well at 87.37%. They have more cash on hand. Overall, I'm going to keep Duke Energy on my watch list, but I'm probably not going to add to Duke when I really compare the two companies. I really was going into this believing that Duke was a buy, but now when I look at both companies side by side, I don't feel that way anymore. I feel like I should increase my holdings into Southern Company, especially if they continue to go down in price. And as long as it's below its 52-week high, I think at its current valuation is a fair deal. So as a company, when it comes to utilities, I'll probably add some more when it comes to the Southern Company. Duke at this moment, I'm going to pass. Now, so for me, the Southern Company is the winner when it comes to this particular battle. Let me know, do you own Duke Energy? Are you an owner of the Southern Company? Which company do you like more in the utility space? Leave your comments below. Smash that like button if you haven't done so, and please subscribe. It really helps out the channel. I talk about mainly dividend stocks. I love dividends, growth stocks, penny stocks, index funds, and general financial information as a whole. You can catch me releasing new videos a couple of times a week, and I'll probably do another video tomorrow on PPL and Black Hills. There are other utility companies I've been looking at in the same space. Until next time, everyone have a good one. Be safe out there. Peace.